Okay guys, in this video we're going to be putting on a trade on eToro. Now I've just received an alert in my inbox for New Zealand dollar USD. Okay, that was a monthly trade triangle, so this is an excellent trading opportunity for us. Click on our chart. Okay, right, so I've got my weeklies and everything set up here. Let's go to 1 month chart. Oh, let me show you on the 3 month. Okay, so here we are today. A monthly green trade triangle has come about. Okay, and over here we've got a monthly, weekly and daily, and our score is plus 100. Okay, so it's in an upwards trend. And the monthly, it's through a new 3 month opening high. Okay, so that's what the signal we're looking for. A monthly, we're in the direction that we want to be for the monthly, and automatically becomes a weekly. Okay, and it's also a daily. Okay, so we can see here the trend had been going sideways, a little bit down, up, and now it's moving up again. What you can do just to reinforce this, and I will let Adam Houston explain this to you, but we can do something that's called a Fibonacci retracement. And this is the Fibonacci tool over here. Just click on that, and here we're looking for the highest high. So we put it there first, and drag that down to the lowest low. Okay, so it's around about there somewhere. Let's take that up a little bit more. Now these are retracement lines. Okay, they go 61.8%, 50%, 38.2%, 23.6%. Now you can go up here to the trade school and you can learn all about Fibonacci retracements, so I won't bother teaching you that. But over here I can see that it's broken past the 61.8%. Now you don't have to do this, just follow you can just follow blindly and mechanically along. It's a monthly trade triangle, weekly trade triangle, and the daily, all in the same direction. That means we're going to put a trade on. And this is for New Zealand dollar USD. That means we're going to buy New Zealand dollar USD. That's all there is to it. It's as simple as that. Now, we go straight to our web trader. Okay, so we signed in with our eToro. I've opened a new trading account here. Okay, so New Zealand dollar USD, there it is there. We want to buy it. Okay, over here people are selling it. Don't worry about these people. There's a thing on there called copy trader. Don't do that. Okay, so we want to buy it, but now we're going to put on 4 trades very quickly. Okay, so always 4 trades. So I'm going to hit buy here. Okay, for each trade I'm going to put $200. Now the spread is going to be $6 per trade, and per pip is $2. Okay, if you move this over here, it's going to move your stop loss. You can see my stop loss there is almost the full 200. If I go to, that's 50, it's moved my stop loss 400 away, but it's increased my amount that I'm investing. If I go the other way, my stop loss is 100 and 50. So there's much easier chance of being hit there. So what I want to do here is go for, whoops, let's get that back down to 200. Okay, and 200 is my stop loss there. Okay, open trade. Now we're going to open 4 in quick succession. Okay, there we go. Risk level 100. My amount is 200, means my stop loss there is 200. Okay, now we're going to open 4 of these in quick succession. So let's go. That's 1. Buy New Zealand dollar. 200. Open trade. Buy New Zealand dollar. 200. Open trade. And one more. Buy New Zealand dollar. 200. Open trade. Okay, so we've got 4 trades on. Now it's always going to be in the negative here because that's your stop loss, $6. Okay. Now I don't want to risk $800 in the market. I'm happy to risk 400. So now we're going to come and put our stop loss on. Okay. So this is setting our stop loss. You can just come in here and put exactly the amount you want in. So minus 100. So I have it to go 100. Hit OK there. And I do it for all of them. It does give you a limit to what you can do, but we're going to be moving this throughout the life of this trade. Okay. Right, the next thing we're going to do is we're going to set it up to trade over the weekend. So just underneath that little clock there, you can tick this. And here it says, position will remain active over weekend. On Friday at 8 p.m. GMT, your balance will be charged with a fee of $3. So bear that in mind. There's another $3 we're going to be looking at. Okay. See a tick comes in there once it's been approved. And okay. And we do that for all 4 of them. Okay, 1, 2, 3, 4. Right. So the idea about these 4 trades, the first trade here, which probably going to be this one over here, or any one of these, that's probably the first one that went on. Okay, I've got a spread of $3 per trade. Okay, and I've got weekend of another $3, so that's $24 right there. The idea about this first trade here is simply to cover my costs. Okay, that's what I'm aiming for. So I'm pressing on take profit, and in here I want to put 24. Oops, that's 22. $24. Okay, the minimum amount is 28. Okay, no problem. 28. Okay, now the next one, these next 2, number 2 and 3, I want those to make $100 to cover this stop loss here if we get into profit. But I'm going to put it in the ratio of 4 to 6. So the first one I want to make $40. Okay, 40. Okay, and this one here I want to make $60. Okay, so as soon as it hits those, it's going to close itself out. Okay, and then the last one we're going to leave as is. Okay, the full 200. Okay, so now we've got our trades on. Okay, we're actually going into profit here. So it's moved up 2 pips, so it's actually covered our spread. And that is it. We're going to be watching this trade, and as we go slowly into profit here, we'll start moving this stop loss further up, but hopefully it'll hit our targets here quickly and close out the positions. Okay, the idea is we're going to get that one to make a little bit of money, $28. Then that one here is going to make $40 if it hits at take profit point, 60 here, so hopefully we're in profit 128. And then this one here we want to let run. Now these are the ones that can actually really make you a fortune. All we're going to be doing with this, which I'm going to show you in another movie, another video, is moving the stop loss. Now with the Market Club trade triangles, they'll be sending you a daily trade triangle, and that daily trade triangle, if we go back to our Market Club here, every time that sends you to a daily triangle, that's if it's green, it's a high, a 3-day high. Okay, so in the next video I'll show you we'll be setting our stop loss to 3 days high. We'll just keep moving that stop loss. Okay, that is it. We've got a trade on. Right, so we'll be watching that now. It looks like it's moving in our direction. That is it. So just to summarize, come and put 4 trades on as quick as you can. Once you've got your go ahead from your Market Club trade triangles, then move your stop loss down to 100 or whatever it is that you like to do. In this stage here, I've got $2 per pip. Okay, that first trade there, we want to cover expenses, $28. This one, the second trade is we've set at $40. The third one we've set at 60, and this one here we've let run. Now the most dangerous part is this getting into this trade, because we're exposed here for $400. Okay, we're going to keep an eye on this now. Right, That's it for this video. We'll come back and review this in the next video.